So businesses and their owners need to consider their current position in regards to the following before the year end. So dividends. So every individual gets a £2,000 a year dividend tax nil rate band. So if you haven't received a dividend this year and you are a shareholder in a company, or you've got family members that have shares in your company, why don't you look at giving them a £2,000 as long as you've got the reserves to take those dividends, and they won't pay a penny of tax on that. If you miss this tax year and you submit the tax return for 2021, you can't then carry that forward, the £2,000 allowance, to the following year. So that needs to be used each year. The same with the capital gains annual exemption. You get £12,300 each year to make a gain, and again, you don't pay any tax. So if, for example, let's say you have some shares and you have, I don't know, £50,000 worth of gains in those shares, you could decide, okay, I want to take some of those gains, sell up to £12,300 worth and not pay a penny of tax on those gains. Business asset disposal relief, so entrepreneurs relief. This has been heavily attacked the last couple of years and has had a lot of negative press. And last year it was reduced from a £10 million annual lifetime allowance to £1 million. And to get entrepreneurs relief, this is effectively selling shares in a trading business that you own over a certain amount, and you might need to make sure that within 2 years you're not restarting up a business in that same industry. But again, there's a lot of rumours that this could be further attacked by the Chancellor, and therefore if you are in the process of selling a business or closing down a business, you might want to try and get this through as soon as possible. And the last point, incorporation. So there are a lot of tax advantages by being a limited company. Again, this may be something you want to try and get in this year in case that in the budget or later down the line, the Chancellor adjusts the tax efficient structure to becoming into a limited company. Over the last few years, us at Davis Grant have been incorporating a lot of property portfolios, and some of the incorporations can take up to 3 tax years. So if you effectively start the incorporation before the end of this tax year, you can effectively get a year head start. And if you do have a property portfolio, please do get in touch, because that is something we can assist with. Corporation tax relief. So as a business, you pay corporation tax, and there are a few main things to look at kind of at the end of your financial year, but it's relevant looking at the end of the tax year as well. So they announced at the back end of last year that the Aia Allowance, the annual investment allowance for capital allowances, is now going to remain at £1 million. So that means a business can effectively buy assets, fixed assets, for the business up to £1 million and get full tax relief on those assets. So let's say you buy something for 100,000, you'll get 19% on the full 100,000 tax relief. R&D tax credits. Again, we've been submitting R&D tax credits for our clients for about the last 10 years. And businesses last year claimed over £5 billion back from HMRC. So do you have any projects that are potentially R&D? Even if you're not 100%, please just give one of us a call, either your director or manager that looks after your Davis Grant, and we can have those conversations to see if there's anything you can potentially claim. Now with R&D, some people don't know that you can actually go back and you have 2 years to submit your R&D claim from the end of your accounting period. So if we looked at it and you have R&D that you can claim, and depending on the timing, we can potentially go back and do your last 2 years R&D tax credits, and therefore potentially either get tax back that you paid, or if you were loss making, also get your tax credit. And lastly, the patent box. Again, if you make profits for patent inventions or IP, there's potentially some tax credits we can also look at getting you back from HMRC. I think the other point just to make onto corporation tax is if you make company pension contributions, or you don't and you potentially want to make company pension contributions, that to be able to get tax relief on these, they need to be actually paid to the pension before the end of your accounting period. So if your accounting period runs to the 31st of March, and you want to make a £10,000 pension contribution to get 19% corporation tax relief on that, you need to have made the payment before the end of March. So again, if you are coming up to the end of your accounting year, speak to your accountant, speak to us, speak to your financial advisor, and get the ball rolling.